Folks. I'm Joe Badelli. I'd like to welcome you to Propy's weekly webinar. This is episode 69. Crypto loans are all the rage. Today, you're going to learn everything about them. Propy's weekly webinar gives you the latest trends in technology in the real estate world. With me today is Eric Mendelson. Hi, Eric.
How's it going? Thanks for having me.
As well as John O'Shea. And today your takeaway will be, what is a crypto loan and how to strategically use collateral? How this new type of loan can revolutionize the real estate market. And more importantly, why you should tell your clients about it. Now, first, I'd like to introduce Eric Mendelson, who's a licensed realtor at Miami Real Estate Agency. He's an award-winning technologist as well as a licensed realtor, a blockchain entrepreneur that has helped many executives in the cryptocurrency community relocate to South Florida. If you need an agent contact in South Florida, Eric's your person. Additionally, Eric has a proven strategy and a direct lender relationship that provides cryptocurrency savvy buyers with the ability to leverage their crypto in order to finance their real estate investments. And hopefully he'll also tell us how that also affects capital gains tax. Eric, can you tell a little bit more about yourself and what's going on there in Miami?
Yeah, appreciate it. Thanks for having me. Music executive, I should say probably former music executive, got into the technology space around 2004, 2005, after one of the major record labels ripped me and my business partner, who was a multi-platinum recording artist of about $15 million. I said, this probably isn't the industry I want to be in anymore. So got into technology, developed some award-winning music applications around the 2017, ICO boom, when ICO started to show their face in 2016, 2017, and kind of haven't looked back. Went down the blockchain rabbit hole, saw ways that blockchain could improve society, fix problems for society, and then more granularly, how can it fix problems in the music industry? And went down that space for several years, and been a licensed realtor for about 13 years. And then I guess at the start of COVID, my practice grew exponentially because there was an influx of people in the cryptocurrency community and technology community, primarily from New York as well as San Francisco and LA, relocating to Miami permanently. And a lot of these individuals needed a place and a home, a place to live. And because I was a trusted member of the community, meaning the technology as well as blockchain community, I was like their first resource. And eventually came up with a strategy, as you mentioned earlier, that allows them to leverage the one asset, which is cryptocurrency, to purchase another asset, which is property, without losing the upside appreciation potential of their first asset, crypto, and avoid capital gains tax. And I'm sure we'll get into that in a second.
Well, I just got to say, so crypto and real estate really is music to your ears.
You know what? I'm going to use that from now on. That's really good. That's well played. Well played.
And also with us is John O'Shea. John is the CEO and founder of Helio Lending and chairman of the board at Sios Corp. John has developed an online lending business that enables holders of certain cryptocurrencies, such as Bitcoin, Ethereum, Litecoin, or Ripple, to use their coins as security for loans in US dollars. The application process is 100% online. And normally they expect loans to be approved within 24 hours. Yes, folks, that's not days, that's hours. They can pay the loan amount into bank accounts in many countries. Welcome, John O'Shea.
Thanks so much for having me, and thanks for Propy for putting this together. It's a good opportunity for us to explain how the crypto world is moving into the real estate world, or real estate's moving into crypto. Helio has a portal which you can find at heliolending.com. Helio has developed itself into, we believe, is one of the premium aggregators of crypto lending. And what that means is that we have a panel of lenders, up to 9 different lending solutions available to customers. And the reason that I went down that road, more than having the vertical market, which the companies we support have, is that every individual wanted something a little bit different. So if we look at the loan variations, there was size. So some people only wanted to have a small loan. Then there was those who wanted to have a very, very large loan, and we can do up to $15 million tranches in one lot. And then people wanted to have different LTVs. So some people wanted to be very conservative and go down to, say, 20%. Others were more aggressive, and we found that most of the customers wanted to get as much as they possibly could, leveraging up to 70% of their asset. So we will take all the major coins. So pretty much the top 10 coins are available. It's market to market, so it's priced at real time. So if you put in $100,000 worth of BTC and choose a 50% loan to value ratio, that means that you're 50% away from the highest price at that particular point. We would then lend you $50,000. There would be interest on that, and the interest varies depending on the size of the loan, but anything below $100,000 can be anything between 8 to 10%. If you get above $1 million, it can go to 3% to even 0 in some cases. So, and it all depends also on the type of lender that you're wanting. There's a lot of lenders out there that rehypothecate the asset. So that means that they take your asset and go and trade that asset. So that means it's actually live in the market. Some people are very uncomfortable that their asset is rehypothecated. So therefore that eliminates some of the choices as well. So what we then do is we work with the customer or the client and work out what their desired outcomes are for the loan. And then we would then point them in the right direction for which loan we believe would be suitable for them. Most of the loan providers have a portal, so that you'll go through a portal, and we only yesterday I put a client through that educational process, got online with them with Zoom, showed them how to do that loan, went through that process, and the funds are in her account. Actually, by the time we got off the call, the funds were already in that client's account. So it can be very, very quick in regards to the turnaround. So why would you use the asset of crypto and free that asset up? Firstly, crypto is in financial services a high risk asset, and although we all love it and we believe in it and we understand its future, it still has a high lot of volatility. The second point is most people in crypto don't want to sell that asset. They really are hodlers and they want to accumulate as much as they possibly can. But in some cases, it may be their only asset, or it may be a larger portion of their asset, and they're trying to do some other activity. And what we're finding is a lot of people are trying to diversify that asset of their holding in crypto and maybe put it into property or into business. And I'm sure Eric's going to explain how that may have happened with him, and we've got some really practical examples of that as well. So what you're doing is you're freeing up that asset. I, for an example, use it for school fees. I pay all my school fees through crypto loans, and I borrow those funds. Now, because it's a borrowing, I haven't actually sold the asset, so that it's not a taxable event. Now, I don't give tax advice, but my advice that I have from my accountant is that's not a taxable event. I still own the underlying asset. So if the asset goes up, then I can then pay out the loan with either cash or use some of my crypto and get some of my crypto back. Or if the asset goes down and it goes below 50%, then I have to either have a choice. At that particular time, do I believe in crypto and do I want to top it up? So it's a margin call. So we're ringing and saying to you, hey, it's getting close to your margin. What do you want to do? And the client at that particular time has the choice. They can either top it up, take a little bit of the crypto off the table, or in turn walk away. And they're non-recourse loans. The other beauty of the loan is, unlike traditional lending, where if you go and do a car loan, you have to buy a car. You can't take that money and go on a holiday. If you're going to do a residential loan, then you have to pay part of it has to go to the property, and so on and so on. Even if you have a equity loan with the banks, you have to buy equities, but they tell you which equities you can buy. So with a crypto loan, and this is where I find that it's really exciting, we don't ask those questions. We don't require any financial background in regards to you other than maybe where the crypto came from. If it's a larger transaction, we will ask, how did you get hold of the crypto? And there may be some proof required. But other than that, it's a simple KYC, that's photo ID, proof of address, and you're basically live and able to be able to do a crypto loan. and no other requirements. So we're finding a lot of people in real estate are trying to either top up their loan. So they've gone, and we did a loan just the other day for a client. It was a fantastic opportunity. They were buying a business. They're buying a residential property. The client was a landscape gardener, and he wanted to upgrade the property as part of his portfolio, but he was short. So we did a $200,000 loan for him to help him prop up his traditional lending. And again, that was a very, very smooth transaction and went through very, very quickly. So he still retained his asset. He's then diversified some of that asset into another property. And now he has both of those assets working for him in the market. And I find it's really exciting. And so there's some of the things that you would need to understand of why and how you would get a crypto loan.
You just gave me another idea. So if, as someone selling a house, if I want to just save cash, I have some crypto, and I believe, again, this is not a financial network, folks. So these are entertainment or examples only. If I wanted, and rather than pulling money out to do some renovations prior to sale, I could come to Helio, use my crypto, get a loan, pay for my renovations on my house, because I know I'm going to sell and have cash, but not change my existing cash flow.
Yep.
Would that be a good example?
That's a great example. And not only to renovate the house, we're finding most of it's for deposits, the bank will only go so far because they've got these very stringent rules. For an example, self-employed people, this is perfect for, because the banks don't like self-employed people, even though that we're 80% of the workforce and we produce all these jobs. But if you're a PAYE and getting a paycheck, then the banks like you. And so here's a really good example for those people that are sitting on the capabilities of being able to have some crypto. We can compete with the banks every day of the week.
Got it. All right. So folks, if you're just joining us, this is Propy's weekly webinar, and we're talking about crypto loans and some examples. And each of our guests, Eric and John, have some case studies and examples for you. But if you have any questions, and for our attendees, if you have any questions on what is a crypto loan, if there's still some questions, please type it in the chat window, and we'll come back to make sure we answer those questions. Eric, I understand that you have a recent experience with a crypto loan a couple of weeks ago.
Yeah, sure. First, let me start off by saying that I am not a financial advisor, and I'm not a lawyer, right? Although I pretend I'm one on Instagram. So anything that I say can't be legal or financial advice. But I am a licensed realtor, and I'll talk about a couple of my previous transactions. Also want to mention that if anyone has questions for any of us, feel free to put them in the chat. I guess we'll answer them after we're done talking here. But yeah, so my strategy uses a combination of collateralized lending as well as traditional bank financing. So I've closed around $10 million in cryptocurrency related transactions since the start of COVID. A gentleman came to me. I'm not going to say his name for disclosure reasons. He's worth about $40 million in Bitcoin. At the time, he was living in his mom's basement and in his Tesla. And I'm not kidding. This is not a hypothetical. And he was relocating to Florida. He said, Eric, you know what? I think I want to get some property, but I'm a Bitcoiner and a Bitcoin maximalist, and I don't want to sell my Bitcoin. What kind of strategy can you come up with me? So immediately I thought collateralized lending, but the interest rates admittedly are high, higher than a traditional mortgage by, a traditional loan. So right now, a traditional loan, at least in America, with a 720 or better credit score, 740 or better credit score is 3%, 3.2% on the high side for a traditional 30-year mortgage. Which is obviously fantastic. It's 6 times cheaper, or 4 to 6 times cheaper than a collateralized loan. So how can you get but as John mentioned, my $40 million Bitcoin client and 4 or 5 other clients that I've had, they don't have a job. Quite frankly, they're not just independent workers. They don't have a job. They have no income coming in. Who knows when they file their tax returns. Some of them are on, government healthcare programs, and a bank will never give them a traditional loan. But I found something, or I found one bank, and now I found a second bank, I think today, which I'll hopefully confirm by the end of today, that does what's called a no-doc loan, a no documentation loan. And these were risky loans. These are risky loans. They're high risk to the lender, to the bank. They were, quite frankly, very high risk in 06, 07, 08 when the foreclosure crisis happened in America, and the housing crisis happened in America, where they don't look at your income. They don't look at your bank statements. They don't look at your tax returns. It's basically a stated income where they basically say, well, how much money do you need? How much loan do you want? They look at your credit score. So if your credit score, this is for the traditional bank that I have, traditional lender, 680 or better. If it's a 680 to 700, it's a 65% loan to value. So on $1 million property, they'll lend you up to $650,000. On a 700 credit score, it's a 70% loan to value. On $1 million property, they'll lend you up to $700,000. And the best loan they do is a 75% loan to value, which means your credit score has to be a 720 or better. Again, some of this may not apply to out of state or out of country. I'm talking about specifically U.S. Realtors, U.S. buyers and purchasers and sellers, et cetera. 75% loan to value, $1 million loan, 720 or better. They'll lend you up to $750,000. The interest rate is about 5.5%, is the last loan I just closed. The new bank I'm dealing with, the interest rate is supposed to be around 5.2%. So it's definitely a little bit better than the last bank I was dealing with. However, they look at if it's a $500,000 loan or less, they want to see that you have 3 to 6 months in reserves. I'll talk about that in a second. If it's $500,000 or more, they want to see that you have 6 to 12 months in reserves, crypto reserves. So what does that mean? It means that if your mortgage payment to the bank is, let's say, hypothetically $5,000 a month, and your loan is $700,000 or better, $500,000 or better, they want to see that you have 12 times that amount of your mortgage payment, 12 times in crypto reserves. So $5,000 a month mortgage times 12 is 60,000. All they want to do is they want to see that your customers or the buyer has $60,000 in crypto sitting in a centralized platform where they can get an official statement from. So in America, that would be Coinbase, Gemini, I believe Binance US, Celsius, BlockFi. I'm sure Helio, whatever statements Helio provides will be, or SmartFi, Helio, any of these other like crypto lending platforms, those also qualify as a centralized platform because, as John explained, when you put your money on these platforms, they're collateralizing it, they're holding that. You're not self-custodying it. So I talk fast. Let me just go back. The banks don't custody your crypto. All they want to do is they want to say, okay, if you're borrowing $1 million or $750,000, the underwriters are going to say to the bank, and they obviously work together, how can this person pay this mortgage if they have no job and no income and no nothing? And the bank will say to the underwriter, well, calm down, because the guy's worth 40 million in Bitcoin, so he can definitely afford to pay his mortgage. And oh, by the way, here's his statement that shows $80,000 in Bitcoin on Coinbase or Helio, and we know that at least for the next 12 months he'll have his mortgage payments. This is a pretty, quite frankly, very unique situation that I've worked out, because I've actually sat down with two banks and explained to them, like went over the whole crypto 101, and actually convinced these banks to do these kind of risky lending what's the word I'm looking for? Provide these lending, this lending situation, because there's not a lot of banks in America that would touch this stuff. So again, high risk. So for the bank, it's high risk. They hedge that risk by giving you a higher interest rate at around 5.5%, which is about 2.5 points higher than it should be. So you're looking at about a 40% higher loan interest rate, right? But as we all know, people that hold crypto, people that hold Bitcoin, we believe that it's going to go up more than 5% over, per year for the next 30 years. Or even in John's, as John explained, if he's lending at 18%, quite frankly, I think that you'll find a lot of Bitcoiners who believe it's going to go up more than 18%. I do, right? So to them, even though the interest rates are high on both sides of the equation, for them to get hit with a 20 to 30% capital gains tax, they're saving that, because when you take a loan out, there is no capital gains tax. And you're not selling your Bitcoin to get property or anything. When you do that, it is a taxable event. So if you use Bitcoin to trade to Ethereum, if you send me Bitcoin, if you use Bitcoin or Ethereum to buy a house, that is a taxable event. And the the only way that you can avoid any taxable event is to take a loan out and buy your second asset, your property, with that loan. So my strategy, 75% traditional mortgage at around 5.5% rate. The other 25% is the other part of the hedge for the bank, because the bank is lending you at a high interest rate of 5.5%, but they're also asking the buyer to put in 25% of the purchase price of the property as the down payment. So if that bank has to foreclose on that property, not only are they charging you a high rate or higher rate, they're also going to be able to sell that property, especially in this hot market in a lot of countries, in a lot of states around America, very hot real estate market, as we're all aware. That lender can easily foreclose on that person, and they know that they have a good cushion with that 25% down payment. So I tell my clients, you can do one of three things. You can use your own cash for that $250,000 down payment on that $1 million loan. Don't recommend that. Or you could sell Bitcoin, get your 250 and use that. Don't recommend that. That's a taxable event. Or you can go to Helio Lending and give them $500,000 in Bitcoin, and John will then give you or whatever your loan to value is, John, 70%.
Yeah, and just
it's
just on that, Eric.
For clarification here, and we do have a question, John, maybe you want to take that. But I think, Eric, one clarification. I don't think John said 18%. Just for clarify in the example.
Sorry.
Yeah.
I apologize.
No, that's okay. But just on that example you gave, Eric, I would have actually, the way that you've done that structure is great. But in fact, we could get that interest rate down. I just did a loan just recently for $700,000, and it's 3%, and they took a 3-year term. So I think what you're saying is fantastic. But what you maybe should do is come to us, and we could show you how you can structure some of this stuff even better than what the banks are offering. We can actually do a put and call strategy on a 6-month loan with 0 interest and guaranteed no margin call. So there's some really exciting products out there. And what you're talking about, I think, is fantastic, because we also have a panel of lenders that are non-traditional lenders. We have about our partner Matthews Group. We have around about 500 lenders on our panel that we can match against loans that are more flexible, like you're saying, no doc loans. And this is where it's all going to go. It's going to go.
So now I want to stay right there, Eric and John, because I know, I think Josh, we have a question coming in from Josh. Tell us a little bit more about no doc loans, no disclosure loans, I think is how we phrase it in his question.
No, I think he wants to know the banks that I mentioned, like what banks that I'm dealing with offer no doc loan, which I'll get into a second. But I did want to ask John a question, and also for the audience, this is the first time John and I have met and spoken, so I'm glad that we have. John, that you said it's a 3-year term. Do you allow that customer to then roll that over? Obviously, mortgages are typically 30 years.
Yeah, they can. Yeah, no, they can do it. You can roll it over. No cost to roll it over either. So, and there's no cost to use Helio. We actually we get paid by the underwriter. So whether you go through us or go through the front door, it's exactly the same pricing. Just that we've sifted through all of them and understand each product and how that would work. So, yeah. So did that answer your question?
Yeah, no, I think so. So basically, if you're offering them, let's say a 3% rate for a 3-year term, as they get closer to the edge of that term and they still owe like $500,000, but they don't have $500,000, they can then just roll that 3% loan over.
Roll it over. They can. Yeah, the average loan, the way I try and structure the loans is 50% LTV, so you don't have to worry about it. 1-year term, flexibility to roll over. Majority of people go for a shorter term because they're uncomfortable, but then they end up rolling it over anyway. There's only one provider in the market that will do a 3-year term. So majority of them are 12 months max. So, that's just the way the market is, because it's still maturing, it's still growing. But, I can't see why you wouldn't have a longer term loan on crypto. The person that we're doing this 3-year loan, it's interesting. Like your client, very, very wealthy individual, they're doing up to $15 million tranches to diversify, to buy into solar businesses, which are generating income. So it's really interesting ways everyone's looking at this asset class and how they're diversifying the asset class. And what you're talking about with no doc loans is just another arm to it. So we believe that the no doc loan lending arm is ideally suited to crypto, and we've got a panel of those. And we might be able to even introduce you some of our US panel, so that could give you a little bit more reach into this sort of space.
All right, so I think we've seen a number of new products related to loans, crypto loans coming in. We only have about 5-10 minutes left. I do want to go and get kind of your understanding based on what you've seen just in the last 6 months related to crypto and loans. Eric, where do you see the markets going for agents, and how, as a licensed realtor, how do you open up that conversation to a client, to a prospective buyer or seller, or if they wanted to renovate or, do some changes on the home, to go down that path if the agent's not that comfortable in blockchain or crypto talk?
Well, I am an agent. So what agent are you? Agent?
Our audience. So if we have agents in the audience, what advice would you give them to go learn and understand to be able to have that conversation with one of their prospective clients?
Okay, great question. So that kind of actually leads into what Josh had asked before, which I didn't answer, and I want to go back. So Josh, I don't disclose the banking relationships that I have because it would cannibalize my business in Miami. And obviously, you realize that there's, you realize the importance of having that banking relationship. But Josh, if you're a licensed agent outside of Florida and you have a client that kind of like what Joe was asking about, and you have a client that's interested in this, you can reach out to me, and then I will make that relationship or bridge that relationship between you and the bank. But I'm not sure if you're licensed in Florida, and quite frankly, I just don't tell people in Florida who that is. That's where I make my money. However, it sounds like John would be a great source as well, because it sounds like he has a bunch of banks in his network that offer better rates than even what I mentioned before. So why not reach out to Helio first? And then if that doesn't suit you, you could certainly reach out to me, unless you're in Florida.
And I think that's also really important for everybody. We're here as a resource. We can sift through that. We can help your clients. We can help the real estate agents. But I can tell you the reason to come to us is we'll pay you a referral fee. And so we're going to build that network so that one of the things that is important is generating some revenue from these services. So not only selling the house, but the loan. And so we've built a model for real estate agents that will allow them to track their leads, understand the clients, go through some education. Propy's got some great educational content on their websites. It's just about getting in and getting your hands dirty and asking the question. And it'd be surprising how many of your customers are sitting on crypto. You just haven't asked. I'd start asking.
Yeah, and that's kind of, I guess, what Joe just asked is you don't know if your clients are sitting on crypto unless you ask. Some may be reluctant to tell you, but most are kind of they may not say, hey, I have XYZ amount of crypto, but they'll say, yeah, I'm holding some. Well, as soon as they say, yeah, I'm holding some, well, have you thought about this option for your borrowing, lending solution or purchasing solution? And
or upgrading.
No, I haven't. I didn't even know I can do that. And then you open up their whole world. For me. Again, like I said, I'm in technology, I'm in blockchain. So once I got one client, so I get most of my clients honestly through Telegram networks, like in Miami, there's, Miami crypto based networks, Telegram networks that I'm in. I'm also an administrator on one of the networks, and it's through this network of individuals that I become a trusted source. So Josh and others, I recommend that you become a trusted source in your states and in your communities. It's honestly as simple as getting in certain Telegram groups, certain Facebook groups, Discord rooms. I mean, all social networking groups, but specific to crypto, and then just start networking with individuals in that group, and then you become a trusted source. And then if you're the only realtor in that space that understands how to transact in the manner that we're discussing on this call today, believe me, you're going to get a lot of referral business. So Joe, the main way is I got one client, I executed, he referred me to 5 other people. I've executed on some of them, still executing on others. And then there's a referral just keeps growing and growing and growing. And that's how my business has grown exponentially during COVID.
Great. Hey folks, this is Propy's weekly webinar as we wind down here. A couple locations to search. If you're attendees, check your chat window. John O'Shea can be reached at heliolending.com. Check it out. Additionally, join us next week. We're going to kick off a little Florida market segments the next couple of weeks. Starting off on the 18th will be Mike Valerio of New Western Acquisitions. And we're going to talk about some parts of the Florida market where Mike is, but also micro markets. We'll have Jay Parker, CEO Douglas Elliman in Florida to talk about the latest in Florida market trends. And we'll continue September 1st with hopefully, if you know any agents in the Tampa Bay area or brokerage in the Tampa Bay area, have them reach out to me. I like to get Tampa, St. Pete area covered on this show. And then Josh, I do need some North Carolina. I want to move up into mid-September into Georgia and North Carolina and see how the market is trending up there. So reach out at joe@propy.com if you have any agents or brokerages that would love to be on the show to provide our audience some inputs. And then we'll circle back again through Arizona in October and Texas and California. So we can try and cover the loop to let you all know what's going on around the US in the real estate market related to crypto and blockchain. And for our attendees today, if you'd like to stay on, Gwyneth Iredale, Propy's Senior Customer Success Manager, will stay on after the conclusion of this webinar and give you a demo to show you how Propy's offer management can streamline your offers from offer acceptance and even Propy's platform to close. And I'll let Gwen take that away. In closing, John, any last comments for the audience? And thank you very much for being on today.
Look, I just say to all the agents and people listening, sometimes these things can be scary and a bit daunting. And like any new technology, it took us all a long time to realize that we could use our phones to bank and ATMs, and all of this stuff is fast growing. I just say get in there, have a look at it. Feel free to reach out to us. There's no question that's stupid. People like Eric, are there, and same with Propy. I think you've got to be in it because at the moment it's a very, very fast growing space, and it's going to add a lot of value to you as a real estate agent if you have this in your arsenal of tricks.
Eric, any closing comments?
Yeah, don't believe a lot of the sensationalist headlines that are out there about properties that are selling for Bitcoin, because most people who have Bitcoin don't want that capital gain, so they're not using Bitcoin, and that Bitcoin is usually being converted right before the transaction to purchase the property. So I think that what we've discussed on this call today is the better alternative to that, right? And it's not sensationalist. This is the real way to leverage one asset to buy another asset and to build generational wealth for you and your family through real estate transactions, or being a realtor and helping people transact in this manner. They're going to thank you forever if it's successful. So why not be educated in this space and learn how to do it correctly?
And for you folks out there, if you want to learn more about crypto, if you want to take advantage, have a better understanding of crypto, understand what a wallet and exchange, what NFT is, and we'll cover that in upcoming episodes on our weekly webinar. And more importantly, blockchain and how it ties into real estate. Propy offers a wonderful course for agents called the Crypto Certified Agent Course. You can visit propy.com, click on products, and select Crypto Certified Agent Course. Thank you very much. This is episode 69 of Propy's weekly webinar. For those attendees joining us live here, stay on, and Gwyneth will give you a nice short demo of Propy's platform. For everyone else, Eric, John, thank you very much. I'm going to have both of you on back here in a couple months, and I want to see the latest of what happened with your crypto loans.
Sounds good.
And Eric, please reach out to me or send us your email address, Eric. I'd love to catch up with you.
Yeah, absolutely. I think the next call, Joe, you'll see a transaction between one of my clients and John take place. I can almost promise you that.
There you go. Then we'll see it. Propy, bringing the world together.
There you go. One agent at a time.
Thanks.
All right, take care.